Hello and a warm welcome to Personal Finance. I'm Gugulethu Cele. Now, with so many saving and investment options out there, how can you be sure that your money is working optimally for you? To tell us more and potentially answer this question for us tonight is Lance Solms, who's the Managing Director of ITransact, to give us more details. Good to have you with us today, Lance.
Thank you very much.
Let's pick up again, just for the new viewers who might be watching the show, exchange traded funds, commonly referred to as ETFs. What are these and how do they work?
They're quite simple. Well, I'll use the top 40 as a good example. By purchasing one share, you're purchasing the performance of the top performing South African companies all in one go, without having to do the research and all the legwork and everything. And so that's what makes me so popular. And you can do that with many other asset classes as well. You can do that with property. You can buy the best performing property companies just by buying one property share. And I guess that's what makes ETFs so popular and easy to use for the general investor or the man on the street.
Exactly. I started off investing through that manner too, but you often hear a lot of naysayers saying that this is a form of passive investing instead of active. So what might some of the benefits be where you, again, coming back to the introduction of this particular interview, make sure that your money works optimally for you? Instead of choosing one company, you're choosing from a basket of the top performers.
Well, I think the first place an investor or somebody who wants to save properly and he's taking his retirement seriously is you need a financial advisor. That's the first thing that you do need. You know, whether you're buying an ETF or any other product, if you don't have the right roadmap in front of you or the right structure or the right strategy, none of these are actually going to work. So number one, you need a good advisor who can offer you all the products in South Africa and not just one particular product. ETFs just make up a certain portion of the market. They play an extremely important role when it comes down to costs and also performing what we call broad market investment strategies. So typically what an advisor would advise somebody who's just starting out investing is to get something broad market like the top 40, like explained earlier. So you own the top 40 performance of the top 40 companies in South Africa. Yeah. And then you use that as a core and you use really good fund managers as a satellite where you use other kind of strategies like metals, for example, or agriculture, for example, or any of these other kind of strategies that can give you something a little bit different than to what the normal market would give you. But for that, you need the guidance of a financial advisor.
I'm glad you bring that up because it's so difficult to navigate actually which particular basket of ETFs you actually want to explore into or particular sectors of the market, because we work as a media institution. There are lots of headlines that retailers are suffering or retailers are up. So one might get lost in identifying what might work for their strategy.
Absolutely. I think most of us, as we call laymen, who have day jobs, financial advice is extremely important. I mean, things change from the time that you start your first job. And I'll just give you an example. If you start working at the age of 20, and by the time you retire, you've had 540 paychecks. Now, that may seem like a lot, but if you're going to live till you're 85, you've almost got another 250 paychecks to sort out yourself.
Sure.
And that's what people don't understand. And that's why most South Africans retire poorly, because they don't understand they've got 540 chances, assuming you invest from day one on your first job, to actually save. And who of us have started saving on our first day? Very few of us.
Very few of us. I'll admit I wasn't one of them. In hindsight, I do wish that I did. But talk to us about the level of education and understanding, because a lot of these things are available online. We can also read about them through media institutions or watching this show. But
Absolutely.
What are the key lessons that we should be learning when it comes to understanding ETFs and the benefit that it has in creating wealth?
Okay, I think the first thing one should understand about an exchange-traded fund is it is exactly that. You're buying the market. You're buying the market, no more and no less. You're not buying something that is based on a team or a fund management house's view of the market, which could be wrong, and often they are. So all you're doing is you're buying what the market in your particular country is delivering. There are other ETFs on our market which do give you exposure to other markets, not just South African markets, which is also important.
Offshore investing, right?
The offshore investing. Yes. Well, typically it's not really offshore investing. You're still using your South African rands. It's just that they've been exposed to other companies. So almost see it if you had 100 Rand in the market and you had a 50% split, 50 Rand would be exposed to South African companies and another 50 Rand would be exposed to the performance of offshore companies. But effectively, you're still investing in rands, which makes it very attractive to the average South African, because you don't have to go through all these weird and wonderful exchange control laws and so forth. You can just immediately, again, by buying one ETF, There's the Deutsche Bank World Index, for example. By buying that one share, you get exposure to over 1,000 of the top companies worldwide.
Wow.
And that's quite important, and that's quite powerful for a normal investor like you and I at the end of the day, because by not investing overseas, you're missing out on 99% of the opportunities. So exchange-traded funds actually give that to all South Africans, a very easy one-step entry level into gaining exposure to offshore markets with no hassle or drama attached to it.
Someone who might be hearing this for the first time probably thinks, goodness, I need to be a millionaire to invest in ETFs, but that's not the case, right?
It's not the case. Most ETFs start at 300 Rand. In actual fact, in some cases you can buy a portfolio of ETFs at 300 Rand, which contain bonds, cash,
wow,
domestic
little
equities,
bit of everything,
and offshore exposure as well, all for 300 Rand. So it's extremely accessible for the average South African investor.
What about fees and costs associated with investing?
Well, that's the good thing about ETFs. The fees and costs are low. And you mentioned passive earlier on, and passive is probably the wrong word to use for these instruments. There's nothing passive about it. In actual fact, there's a lot of activity behind these passive funds, and where the activity goes in is the mathematical algorithm that decides on what, for example, that it measures all 180 companies on the Johannesburg Stock Exchange, and it says, I only want to invest in the top 40. And that's a mathematical algorithm. That's where the cleverness and the smartness comes into an ETF. But because that algorithm mechanically does that every single day, you don't need a massive team of people to run it. And that's where the cost savings of exchange-traded funds come in, is that you don't need researchers to go visit the CEO of the companies, go down the mines, kick the tires, see if everything's okay. It's robotic asset management. Let's just put it that way. And that's why they are so cheap. I mean, to give you an example, there's one, well, it's the RMB Top 40 ETF. It's the cheapest Top 40 ETF in South Africa. It's 19 basis points. Versus some of the other top 40s that are almost 45 basis points. So you do even get different cost differentials between certain ETFs. But by far, the average ETF is way cheaper than the average actively managed fund, because of the fact that they've got all these extra expenses like analysts and so forth, which are highly skilled, highly paid individuals that need to go out and do this work.
Exactly. Coming back, I know that you did mention that you do need to seek financial advice when it comes to selecting the appropriate ETF for you. Would this also apply when it comes to costs and minimizing the costs on your investment portfolio?
Yes, well, exactly. I mean, let's just take your entire investment portfolio. Let's include ETFs and active and passive, and let's just say everything, you lump it into one. It's got a certain cost to it. And let's just say that your entire investment portfolio, just for ease of use of numbers, let's just say returns 10% per annum. Let's just use that as a nice, easy number. And your costs are 3% in general. People will go, well, that's not so bad. But 3% of 10% is 30%. And this is where people miss the boat, is they don't understand that the cost is on the return of your investment.
Yeah.
A lot of people get confused. A lot of people think, well, if I'm investing 100,000 Rand, it's 3% costs. Well, that's not too bad, is it? No, I'll recover that, but it's not. Remember that it's the percentage of your return. So always try and do that calculation. Whatever your return is, and you know what your cost is, use that as a percentage. It's frightening. In some cases, people are paying 6% costs. So, and they're getting, say, 10% return. So 60% of their return is going away in cost. Now, I must add inflation to that, because technically, inflation for you and I, sitting here, inflation for us is a cost. You have to add that on. So if you're sitting with, say, 3% cost, which is an average out there, one of the sort of, let's call it the low average in South Africa. Plus you're sitting with inflation, we all know it's more than 6%, and your funds returning 10, you can understand why people, and that's why you need financial advice. You know, you need somebody who can guide you through these things. You can put the throttle on when the throttle is necessary to put on. You can take the throttle off. Also, to make sure that you can invest in products where you're not bound by investing every month, because what happens if you get retrenched? Now you can't afford your product anymore. So that what happens is that they say, fine, you don't have to invest, but what happens is all your returns get, they still take their fees, and they use your returns to take the fees. So again, I can't stress the importance of taking financial advice, no matter what product you would buy at the end of the day. But a good financial advisor will make sure that you're fully stocked up on ETFs, purely because they're cheap, and they deliver results.
Exactly. Goodness. Thanks for highlighting some of those concerns there. We've certainly said quite a bit though, but let's get a quick reminder now as to how we can apply this in a real life scenario. Lance, we've certainly said quite a bit and lots of insights gained, especially from my perspective. But for the viewer out there who's caught the tail end of this conversation, yes, what do they need to bear in mind?
Costs. Costs is the all and the be all. You can have the best performing investment in the world. If the costs are sky high, you're not going to have the best performing investment in the world. I'll then say the second secret is diversification. One has to be diversified across most asset classes, and I would say you need cash, you need bonds, property, South African equity and offshore equity, and you need constant exposure to that, because sometimes one of them are not going to do well, but then when one of them don't do well, something else is doing well. Mm-hmm. Like for example, at the moment, South African equities are really not doing well, but offshore equities are doing fantastically well. True. So if you had that in your mix, you wouldn't really be too concerned, because the one is outweighing the other one. So your net result at the end of the day is a nice smooth journey into attaining your savings goals. But if you expose just to one asset class, you're going to be in trouble.
Goes back to investing 101, eh? Diversification is the key to success.
Absolutely.
To close off with, though, a key query that we often get quite often is when we have new company listings or major transactions of big companies listed on the JSE, like SAB Milan and Anheuser-Busch with their potential merger. We saw the spinning off of Bidcorp, the food division, from Bidvest. How does this impact on the ETFs, especially those that have a holding in the top 40 stocks? Okay, well, it's very easy. That computer algorithm I spoke about earlier on, the algorithm that just says, out of you 180 companies on the exchange, which one of you are the top 40? It religiously looks at that. So let's just say that there is a merger of two big companies, and because of their size, it pushes somebody else out of the top 40. Well, that's what will happen. It will push somebody else. But let's say there's a merger of two companies that, because of their size, now push somebody else out of the top 40. They will just appear in the top 40. That's the great thing about owning an exchange traded fund, is all that homework and that legwork and the decision making process of who to own and what to sell and when to buy, that's all been taken away, and it's all done algorithmically for you, and very easy, very cheaply. So when you hear all that noise in the market, don't switch your head about it. Huh?
No, don't.
Perfect. Thank you so much for your time today, Lance, and
inciting
us in all these elements that are so critical when it comes to investing in ETFs and really making sure that your money works for you. That's where we leave it for Personal Finance this evening. Once more, a big thank you to Lance Solms, who's the Managing Director of iTransact, for joining us tonight. Remember, we want to hear your feedback, so get tweeting. Send your comments to @CNBC Africa using the hashtag Finance410, or to myself @Gugulethu. Until next time, it's goodbye from me.